Hello and welcome to this episode of Sashakt Niveshak, brought to you by the National Stock Exchange. Today I'm joined by a very special guest, A Balasubramanian, who's the Managing Director and CEO at Aditya Birla Sunlife Mutual Fund, somebody with more than 30 years of experience, most of it, in fact, maybe all of it, with the same company. Bala, as he is lovingly called in the entire mutual fund industry, is not just a mutual fund expert. He is somebody who has gone way beyond the call of his duty, has worked very hard on investor education. He was the force behind the mutual fund Sahi Hai campaign. He's had multiple chairmanships of AMFI, SEBI committees. So wherever he can play a role, he has a lot of social impact, interest. So it's wonderful to have you here, Bala, and thank you very much for making time. And it's good to talk face to face after a very long time. Uh,
Thank you, Vivek. I also just would like to mention that that our association between you and me goes back to 1999 when you did my first interview in CNBC in front of the TV, first time appearing with a lot of fear and sweating, and you were the one on the other side doing the interview, both on the bond market and equity market. I just want to share this with everyone.
It was entirely by honor, Bala, and I've subsequently traveled with you, seen you addressing thousands of people. I remember you broke a record at Indore where you had a stadium full of, I think, some 7,000 people.
Correct.
It almost felt like it was a rock concert. And it was amazing that, uh, you keep traveling. Every time I call you, you're just traveling and interacting with investors. But my first question to you is that, 30 years, and that too part of one organization. Uh, these days, young people will probably have changed 40 jobs in 30 years. But what is the power of long term? If I were to ask you from a career point of view, you've started, probably at the bottom and, worked hard and risen up to a senior position. Success doesn't come overnight. That's pretty much the same about investing, isn't it?
Yeah. I think as you mentioned, about 30 years in the same organization and 35 years in the Indian mutual fund industry. Of course, I draw some lessons from that. That as anyone gets into the job, but the first job when you get, that's the point of time you don't think about, I need to look for another job. You always look at how do I actually improve myself in the same company and keep growing and taking more and more responsibilities and grow in both name and fame and stature as well as on monetary. So that's the way everybody looks at when they start building the career. And in my case, that's what exactly I've done. And sticking to the same organization, of course, being in the right place with the right group is also equally important from luck point of view, I would say. But having said that, some of my lessons have been, see, platforms are given. Everyone has to use a platform with a greater care, greater commitment, greater passion. We have all of us are working for a company for some purpose. And everyone realizes the purpose for which I am working for it, I'm sure I can give my best. Therefore, nothing to compromise on the hard work, nothing to compromise the passion with which I think one should work, and also nothing to compromise the deep commitment that one should bring in building the business. While build the business, of course, you also as an individual grow. So that's also extremely important. But last but not the least is doing things on a normal basis, doing things some kind of extra effort basis. I think travel the extra distance also extremely important. That's why I think some element of risk taking comes. If you draw a parallel from the investment world point of view, I think all such lessons which I mentioned about is equally applicable for the investment world as well. And given the fact that the longer the time you give for anything that you do, the higher the benefit that one may get. Probability of getting higher the benefit is very, very high. And that's what we have seen in the investment world, even in the individuals career wise. We always have the struggle. Sometimes by changing jobs, people believe that you get handshake, bonus, and then both handshake, out bonus you get handshake, in bonus. But those will give you temporary happiness, but not necessarily they will guarantee you a longer term success. Therefore, being at it, staying invested as I call it the investment world, and being at it, continuing to drive and strive for larger success will definitely give a greater output, which is what I also draw a parallel for the investment world point of view also.
So in your, 35-year journey, Bala, you've, some of those travels were together. We've been traveling to small towns, cities, big cities. Uh, what are the changes in investor behavior that you're seeing? So one or two trends that one, at least I read about or see, is that there is a great amount of entrepreneurial hunger today among young people.
Correct.
Instead of taking up a job, they want to, and maybe that's also driven from the fact that they want to own equity, right, in some way.
Correct.
And the second is that, which was probably true of our generation as well, that there were investors and traders. And that still continues, right? Only
Correct.
new avenues have emerged, whether it's crypto, whether it's stock market, whether it's something else. So how do you look at the change in investor behavior over the last 30 years in India?
I think each year, if you have to look at it, it's only getting better. So I'll just give an example that when we started mutual fund as a industry, and even myself was the first timer to the mutual fund industry, we have to do the hard work in terms of making people understand what do you mean by equity investing, what do you mean by power of compounding, what do you mean by yield to maturity, what do you mean by current yield, and then how do you make investments in fixed income, how do you look at the tax benefit that one can get, which can also generate alpha in the overall portfolio. All these things had to be taught to people, even to the people who are extremely learned, even to the people who are extremely wealthy and richy, leave aside even the middle class of the populations. I think we have to teach. So that's something I think now we don't need to teach them because people have become more aware about investing in mutual fund. Second is to happen is like SAP way of investing. When we had Aditya Birla Sunlife Mutual Fund started way back in 95, 96, it's called PSP. That's a payroll savings plan we used to call it. So PSP got converted to today's SAP. When we first one introduced, even today, I also have even PSP, which was get deducted from my salary. And my salary was 8,000 rupees, 400 rupees used to get deducted for a PSP. Even today is going on in one of my schemes. Now the PSP has become SAP. Now SAP way of investing now has become well understood. That's why SAP and asset class growing. People have realized market values go up and down. That question doesn't come nowadays. Anybody you tell actually put money, the obvious first question will come, is it okay to put SAP? So that's why I think the narrative has changed. The third, which of course changed is whenever the market used to be volatile. I think I realized in the year 2008 crisis. After 2008 crisis, the number of people would have asked a question: is it the right time to invest? The market is falling. Is it the right time to invest? The normal question used to be there in the pre-2000 period, the era of 2000. We always used to get a question that when should I redeem my investment? Should I book profit? And these questions used to come. But that narrative completely got changed to the net, which again reflects the majority of the investors. And as you mentioned about the mutual fund SIA that I started along with a team of people in AMFI in the year 2017, post that, I think the investing in mutual funds have become now way of life. That's something I see a change in behavior from investors' point of view. You also mentioned about the startup, but clearly from an entrepreneur attitude, which used to be lacking in India, now it has come back big time thanks to Government of India, Prime Minister Modi's initiative of driving digital India, make in India, and startup India. So when these kind of slogans will start coming in and keep bringing in your mind all the time, these slogans, it's like a chanting mantra on a daily basis. Therefore, it becomes more better for you. And I think each of these initiatives of Government of India is becoming more and more better as the time progresses. And today, even youngsters, the very fact that they want to become an entrepreneur in India is reflects their willingness to take a risk, their willingness to actually plunge into some activities which can actually become. They're not looking at it from a rich point of view. Now, everybody's not looking at it from becoming a rich point of view. Now, everyone become an entrepreneur to be on their own so that they can sustain for their own income and requirement point of view. At the same time, they can upbring their family. So that is the culture which I see has generally changed both on investors' behavior as well as the mindset of the youngsters in India who are looking at completely different way of life, leading a way of life, new way of life. rather than the old way of running their own life.
Hmm. Bala, power of compounding is something we all learn in school and then we forget about it. There are many, many examples that are given from time to time. Had you invested this much, it would have become this much. But since I have a real life story sitting in front of me, 30 years, if you could share with our young viewers that what is the kind of power of compounding? I mean, and I'll come to my next question that how many actually stayed for 30 years, but that's a different question. But uh, if somebody had invested whatever amount 30 years ago in one of your leading schemes and a 30-year journey of compounding, if you could share some experience around that.
I think power of compounding, the word itself, of course, start actually, in fact, power of compounding is started in the schools. This PNR formula is coming from that, in fact. Like everybody remembers, A plus B to the square is A square plus B square to AB times. This is well understood from the textbook point of view. But in real life, people are not seeing it. So that's something, as you rightly mentioned about mutual funds have seen it. So my own experience on the power of compounding, I just take a simple example. When I began the career in the 1992, I think the index would have been somewhere around 1,000 or something. So I don't know the exact number, but somewhere close to that. Let us take 1,000, 1,500. Today, the Sensex, it now has come to about 65,000 index. So I think each year, as the economy grows, the market also grows. Is at the end of the day, if the future is bright, then naturally the companies also do very well. I think each one of us will do very well. So that's something is the power of company. The other area where I always say power of company, especially from youngsters when I say, and every youngsters joins at a salary of say 5 lakh rupees today or 6 lakh rupees. Just starting pay is ranging from 3 to 5 is normal salary for anybody gets qualified in MBA. That's a minimum salary. The maximum, of course, depending upon how powerful you are in terms of intellects and so on and so forth. But it's not going to remain at 5 lakh rupees when you start the career at the age of say 25. You start at 5, the next year become 10% increase, then you have 10% increase, then you have 10% increase, then you have 10% increase. But it's assuming a 10% increase each year because you are doing extremely well. And the 10% increase also takes into account the inflation. Because whenever the company considers the increment, they always look at inflation, then they add up something. So therefore, inflation also is covered in that. So eventually, if you see the gross salary that we get as an individual, keep growing every year by 10%. Just imagine you keep growing by 10% every year. And then at the end of, say, 40 years age or 50 years age, you can imagine what the kind of salary you will draw. And of course, somebody, of course, reach the peak. If you don't upgrade the skills and knowledges, you'll, of course, salary also stop beyond a point of growing. That's a different thing. But the power of this kind of every year growing is something, it helps. That's what I have seen. The power of compounding, I took it about an example of market. Even some of our funds are given an almost 20 to 24% return for the last, say, 25 years. But in the short term, we would have given about, say, 15% return. It's all the moving numbers. But the fact of the matter is, the power of compounding impact will always be felt if I stick to the course of investment continuously, irrespective of whatever the ups and downs we see. And that is the time I think power of compounding will come. That is my personal realization that, as I mentioned earlier, sticking to the gun, being at it, ultimately ensure the power of compounding become real. But if I flip flop in between, if I do a flip flop, then the power of compounding also we must think, we must understand it gets stopped in between. The moment you stop it, power of compounding, even if you take a break of say 2 years, it's like losing your salary income for say 2 years, then you come back to work. So that means the 2 years of income that you lost can never be added to power of compounding and then say now power of compounding is very good. Or power of compounding is so much. That's I think power one has to understand. That my experience is that being at it, stick to the investment discipline at all point of time without getting worried about that what's happening in the surroundings, and then continue your investment work on the one side passionately for you. At the same time, you continue to do your hard work for increasing your income levels continuously. Therefore, these two things go hand in hand. Then the power of compounding creates real wealth for individuals.
Hmm. Bala, most of our generation, I'm not talking about you, but most of our generation missed out on this 20-25% power of compounding. Because even if I were to ask you that how many people actually stayed for these 30 years in your schemes, the number would be very, very little. But so many young people feel that, you guys missed the bus and the best of India is over of the market. As you said, we've come from 1,000 to 65,000. In fact, if you remember 20, 25 years ago, we used to say that the foreigners are coming and making the money.
Correct.
And we Indians are not
Correct.
investing in our country. But that's changing now. As you can see, domestic, numbers are increasing. Uh, what is your outlook for a young person? I'm not asking you for a number, how much will we compound? That's not possible. But do you feel India's growth story, where we are currently and where we can be, will be for the next 20, 25 years, as much as not in figures, not GDP growth, XY,
Correct.
but I'm talking in terms of the opportunity from where we are as a country and therefore as a stock market?
Yeah. I think clearly we have to look at this way. I think our economy growth is real. When I mean real, the power of India is the population and the consumption that Indian population can have at all point of time. The government spending and building the public infrastructure, utilities, whether it is digital infrastructure, whether it's road infrastructure, physical infrastructure, or virtual infrastructure, the government has been making the huge investment in order to make the future bright, which essentially means the question of Indian growth rate is never in doubt. It's always question is how long it will sustain. My belief is the sustainability of Indian growth, staying anywhere between 7 to 7.5%, just grow at that level itself will take our Indian economy to about $5 trillion economy. I think it's become larger than most of the economy in the world, as it is being expected. It'll become the third largest country in the world in terms of GDP size. I think we are on the right path. I think all steps that has been taken by the last 10, 15 years are all leading the path for that direction. I think from a market point of view, the way I think one has to look at it, the market is also a reflection of economic growth. So if you want to look at this, the health of the economy, it comes one from the banking systems. Second is coming from the banking, the market cap of the stock market. And in general, most of the economies, the way the economic market cap is measured is the GDP and market cap become more or less equal in terms of size. Generally, we call it 1:1, or sometimes if the economy does really better, then the size can be become, the GDP market cap could become about 1.3, 1.4. Japan, of course, is the exception, which is almost running about 2 times of GDP. But India, given the power, it can become good. Second is, I think the orderly growth that we are looking at it ultimately lead to income levels for companies, profitable for companies, will also become more sustainable and predictable and long term in nature. If these things are there, then naturally your market has to do far better than what is in the past. But having said that, from a return expectation point of view, see 25% we were lucky at that point of time. Market was discovering stage. I mean, we are now today in discovering stage. We are actually, I would probably say we are a semi-matured market. As the market become matured, as it become bigger and bigger, one must also reduce the expectation, because the same rate of growth, which would have got about 25, 30 years, cannot be repeated, because there is unlocking of value also happens. Whereas in the future, the unlocking will, of course, will happen, but the rate of unlocking of value happening could be really less. Therefore, the best way to set the expectations is the nominal GDP plus 2-3% is written if we get over a period of time. Say nominal GDP would be roughly about, say, 7% plus, say, 4% if we take 11 plus, say, 2 or 3, so 14% kind of expectations. If one gets it best case scenario, that's what you should aim for. The second way to set the expectation is, what are the alternative investment options that you have today? So you have option of real estate, you have option of fixed deposit, you have option of fixed income securities, you have option of postal saving deposits. If you take any of these instruments, including real estate, the average rental yield they'll get will be about 2.5%. The average return that you'll get adjusted for your taxes in real estate would be about, say, 11%. The average return that you'll get on, say, insurance would be roughly about 6.5-7%. And deposits will be in the range of about 7.5-8%. Anything which is more than this, which can give you today, is only about equity. That you will come only if I stay invested for long term. So as I speak today, the market is down. Then you can't actually change your view. No, it'll be illusionary. But it'll at least remain illusionary in the short term. But in the longer term, I think realistic view if you have to take, it'll be the GDP, nominal GDP growth by 2 to 3%. That's the expectation that should have. As long as from investors' point of view, don't have equity market is not for the greed element. It's actually can serve much better. If somebody has got a longer term purpose for which I'm coming, the market will reward. If you come for fulfilling the greed, it can reward you, it can equally punish you as well. So that's where I think we'll have to just keep in mind from expectation setting point of view.
Mm. SEBI has done a lot of work, Bala, in terms of you know uh, creating simpler categories, categorization, and you've been part of that
Correct.
process as well. And we have had a complete overhaul to make the name of the category more realistic and clear to the investor. But yet, there are multiple categories. There are, now there is a whole passive and active. So almost every day there are some new schemes being launched under those categories. Sometimes people do tend to get confused as to, as a beginner, what is a good category for me to start with. So since a lot of young people are listening into this, what would be your advice from a category point of view, which is a good way to begin your journey? And then from there, how do you go further in terms of category?
Sure. I think, in fact, I was one of the committee member when SEBI had constituted to look at the categorization schemes. In fact, we did with a lot of difficulty, and finally we cracked the code as to how categorization is done, linking to the equity market cap on one side and duration and credit on the other side and fixed income. That's why we did it. In fact, it has been a unique model in the world that it's at least giving a clarity to the investors. I think from investors' point of view, today choosing this kind of product is relatively easy. Because the name itself suggests is a large cap oriented fund. It's a large and mid cap oriented fund and mid cap fund and small cap fund. So that's something is very clear. The thematic funds are actually going to classify separately. While we have a plethora of schemes, from investors' point of view, from any youngsters' point of view, when you are starting as an youngster, that means your ability to risk is actually relatively higher because you're not going to retire, say, next 1 year or 2 years. You have long years to go. Therefore, you must choose equity as part of your larger component of your portfolio. The question doesn't arise, go for fixed income and so on. So the question doesn't arise. So you have to go for equity. And within the equity, there are two components of equity. One is a core equity portfolio, which is comprising of large cap, flexi cap, large and mid cap, and small cap. This is the traditional schemes, which is 80% of the market. Then you have all the thematic that comes next. From investors' point of view, youngsters' point of view, you should choose any of these 5 categories, which call it as a core. And as long as you stick to your core portfolio, you don't need to just jump around and keep chasing return based on the past return basis, keep shuffling your portfolio. You don't need to do that. I think take these 5 different categories, the top categories, and just stay invested for youngsters because you are actually making the investment not for 1 or 2 years, you are making the investment for 30 years. At the age of till 60, you'll continue to save. Therefore, that's the way I think one should go about choosing the schemes rather than saying I'll go and park myself here and then move on as and when the market falls and so on and so forth. That is not the way to do it. Anyway, your risking ability is high, risk appetite is high. Therefore, choose schemes from the top 5 6 categories, which constitute about 70% of the Indian mutual fund AUM.
One final question, Bala. 200 lakh crore in FDs. And I'm asking you this because I know that in your younger years, and few people may today know this because you're seen as a managing director and CEO for so many years. But I know that in a large part of your younger years, you were one of the foremost voices on debt, and you actively manage debt.
Correct.
But 200 lakh crore lying in FDs, which for many people they seem to believe is the best way to build my long-term plan. What would you say to them?
I would like to mention one trend that prevails in the US today. With increasing interest rates in US, short-term interest rates have been going up, Fed has been raising interest rates. All of us talk about equity and equity. There's one asset class that is a significant growth that the US has witnessed is the money market mutual funds. A lot of people actually have been earning fixed deposit returns ranging about 2 to 3%. They found investing in money market actually will give a better return because the mark to market is linked to the prevailing interest rate scenario in the industry or in the market, in the economy. Therefore, they all move there. I'm not saying FD is bad. FD, of course, has to be there because it's something you're able to see the return that is coming in for you. Safety of banks in the banking sector is also relatively high. India has always proved that deposit holders never put down to risk. But having said that, fixed income schemes can act as a good alternate, or some portion of those investments that FD would be considered for fixed income investing, given the one power of quantum compounding is real. Second, it captures the interest rate movement that prevails as of today. It can actually keep moving up and down. It gives a. The third is, of course, is the income that you generate on fixed income schemes. You get taxed only at the time of redemptions. It doesn't get taxed on a year-on-year basis. That also you get the benefit as well. Therefore, fixed income as an instrument can act as a cushion. It can also act as one of the substitute for FD's investment, no doubt. But FD, I'm not. There is no comparison between these two instruments. Risk associated in the mutual fund different from the FD risk that is associated, but definitely they can consider. Therefore, this I think my view is a big opportunity for the industry to grow. I think if industry has to become 100 lakh crore size, definitely fixed income as an asset class also has to grow. I think simple in the fixed income to choose actually is the money market mutual fund scheme, which is a liquid fund we call it. That itself is more than enough for people come and park themselves and then decide as and when they want to look at other instruments within the fixed income space can provide. And today's scenario, interest rates are high, and one of the narrative which all of us have got higher for longer. In simple sentence, we say higher for longer, which essentially means the carry in the fixed income would probably be one of the questions that one can create. That opportunity is being provided today, not just only in India, even in the world.
Wonderful talking to you as always, Bala. Thank you very much for coming back. Thank you.
Thank you.